Welcome back to another video. In today's video, we're going to be talking about what multiple time frames are in Forex trading, how do we use them, what are their benefits, and how can we, basically make use of them to enhance our trading to come up with better results. So let's get started. First thing first, please read the disclaimer below. Once done, please continue with the video. Okay, so I'm hoping that you guys have read the disclaimer by now, so let's get started. So a lot of people have been asking about multiple time frames in Forex trading and how do they work, so this is what this video is all about. In this video, we're going to be covering how they work, and again, in Forex, traders use these techniques to enhance their decision, to enhance their probability, and to come up with better results. You can do this by examining a currency pair. By using multiple time frames, it will give us different ideas of what the price is doing and how the price is reacting to a certain price, where the price was the previous day, where the price was the previous hours, so on and so forth. Again, we can analyze what's happening and we can gain a better edge, and we can also get a better understanding, a deeper perspective of what's happening, to increase the accuracy of our trades, to understand what's happening and where the price could potentially head to next. So understanding multiple time frames. Multiple time frames, this is a concept a lot of traders use, even myself. We use this on a daily basis just to enhance our probability to come up with better results. It's also, this understanding multiple time frame isn't as complex as traders make it out to be. It's quite simple and it's quite straightforward if you understand what you're doing and if you know what you're doing. So there's three different categories that these are divided by. First one's long-term or higher time frames. These are typically time frames like the daily, the weekly, or even the monthly. But I like to use the daily and the weekly. I don't really go to the monthly chart because that doesn't go well with my trading style. Again, depending on your trading style, monthly might suit you, but I usually look at the weekly, then look at the daily. Again, just to see where the price is heading on the bigger time frames to get a better direction and to know, what's happening in the market. Now, there's also things like the medium term or the intermediate time frames, and these are intermediate time frames, and these are quite simple as well. Again, these are things like the H4 chart or the hourly chart, and again, these are the medium time frames because also we use that they're not as high as the daily or the weekly. As you know, the days and the weeks are longer than hours. So this is quite similar concept to how we go about with our daily life. So there's something that you will have to bear in mind just to simplify it for you. Again, I like to use the H4 and the H1 chart myself just to get primarily market direction, just to see where the market is heading and just to see what the market is doing in the H4 chart and the H1 chart, so we can benefit from the larger trend. So if the daily is showing bullish and the H4 is making high highs and high lows, on the H1 we've seen that there's a bullish structure being broken, then we can look for potential buys. Vice versa, if the daily or the weekly is showing bearish and the H4 is making low lows and low highs and is heading downwards and is breaking support levels, then we can look for sells depending on our strategy. So again, these time frames are really crucial and they give us an idea about what the market is doing, what the price is doing, and where we could see the stock potentially heading to next. And there's also shorter term time frames. These are typically used by the scalpers or day traders that are in for the position for minutes to a couple of hours. Again, these are time frames that are 30-minute, the 15-minute, 5-minute, or even the 1-minute chart. 1 minute, the lower the time frame, the more noisier it gets. So that's what you need to understand. So in the 1-minute chart, you will see 1-minute candles. In 15-minute chart, you will see 15-minute candles. So if you look at the 1-minute charts and there's 15 candles being printed, that's equivalent to one 15-minute candle. So you're processing more data in your head, and depending on your strategy, it might work well for you, it might not work well for you. So this is something that you're gonna have to analyze to see what's working well and how do you go about it. Like I said to you, this is how my time frame looks like. So I've put a screenshot here for you. So I'll start with the weekly, go to the daily, 4 hour. I don't use the 2 hours, I've just kept it there for some reason, but I'll use the 1 hour. I don't use the 30 minutes as much, and I use the 15 and the 5 as well for entries. So this is the way I start and how I go from one time frame to another time frame, just to increase my confidence, just to see what the price is doing again. And we can use that to identify different things, and it helps me in my trading really well. So this is something that you're gonna have to practice to see if it also helps you as well. So understanding multiple time frame, it consists of different things, and it also helps us in various ways. Like for example, like identifying the identifying the trend. Like I was saying to you earlier on, that we identify the trend from higher time frames to see if it's an uptrend or a downtrend. Then we go on lower time frames to follow the bigger trend in lower time frames and to get a better entry. So from daily we can see it's bullish. We can go to the 4 hours and 1 hour to see it's also bullish. Now we can look for entries on the 15-minute or the 5-minute chart just to get a better probability. Again, we can find trading opportunities by these time frames as well. So once we've, like I've said to you earlier, once we've established where the market's what the market's doing on these time frames, we can go on these time frames here to get an entry, probably this one or that one, just to get an entry again for our bigger time frame support or for the bigger time frame confluences. But we're going into a small time frame for the entries. Again, we can refine entries and exits as well. So when, let's just say that on daily we've got a level that's been that the price is really holding, so we know that this is the level that we'd want to enter into, and we'd also look at levels that the price has been rejecting from to get exit from that and take profit from there, because we don't want to be in a position where we know that a certain price was being rejected at a certain level and then we didn't take a profit out because we're being greedy and then it goes back to zero. So it's really important that we understand this. So there's multiple advantages of multiple time frames, like I was saying to you guys earlier on. You can get increased accuracy because there's more there for you to see. Multiple time frames can give you multiple information. If the information is lining up with one another, then you've got a high probability and you've got a better chance to be accurate and to come out in profit. Again, it can also help with risk management as well by identifying the entry and exit points and where we could set our stop losses and where we could determine the profit targets as well. And also it can also help us, the major part is it can also help us with the trend confirmation. So as you can tell, the trend here is uptrend, so we're not looking for we're not looking for sells, we're looking for buys only. And if the daily is showing up and the 4 hour is also showing up and the 1 hour is showing up, then we can come on 15-minute chart and we look for an entry somewhere here, wherever we can. So let's just say if you entered here, the stop loss are below here and our targets are above there, and again it works really well. So this is something that you guys will have to practice and understand and to get better at it. But again, you'll only get better at it if you have the knowledge and if you practice what you're doing, and if you know what you're doing, then you will definitely get better at it. And like I've said to you earlier on, multiple time frames, they can help us in various ways. Again, they can help us to identify, and they can also help us to analyze potential trading opportunities. It can also help us to combine the time frames to come up with better probability. It can also help us with risk management, and it can also help us to understand where the market is going next and where we could identify the entry and the exit points and what trend we're looking at. So are we looking for buyers in an uptrend? Are we looking for sells in a downtrend? So again, I would suggest you guys to practice this on a demo account before opening a real account, because that's your real money, and demo will build up your confidence as well. But before you go on the demo account, you need knowledge. So please go on my YouTube videos. Please check if there's the topics I've covered previously, because they're all really crucial. And the more knowledge you have, the better you get, and the better you'll get, the more you'll practice, and the more you practice, the perfect your trading will be. And that's how it works. So in this video, we've covered multiple time frames in Forex trading. We've also covered understanding multiple time frames. We've covered the advantages of multiple time frames, and we've also said that the practice makes perfect. So thank you so much for watching my video, guys, and please subscribe my channel. Please like this video, and please leave a comment below and follow us on social media, and I'll see you back for more videos. Thank you so much, guys.